What's up everyone, it's Scotty with Money Vesting. In this video we are going to talk about Tesla here, which continues to slide lower. And despite the Nasdaq pushing higher, Tesla with a huge underperformance, down over 4% on the day today, trading now under 160 per share. So my goal in this video is to go over some of the reasons, the fundamental reasons as to why the stock price continues to slide, and then also go over the technicals as to how low is it potentially going to go. And what I'm planning to do with the cash secured puts. I currently do only have one CSP on Tesla open right now, which I also did mention and share with all the members over at Discord. And we'll be planning to sell maybe a couple more in the future. But again, link's going to be down below if you're interested in joining us and of course getting access to all the buy and sell alerts, options alerts, trade ideas, including all the member benefits and private videos and private live streams that we do 3 days a week, and talking about a lot of swing trading and day trading ideas as well. So link's going to be down below if you're interested in joining. So this right here are some of the more interesting articles. Tesla drops starting price for Model Y yet again below the cost of an average US vehicle. So Tesla dropped the starting price of its Model Y, and now the midsize SUV costs $759 less than the average new car or truck in the US. The Model Y, the top-selling electric vehicle in the US in 2022, now starts at under $47,000. This actually came out yesterday, and again, this is a pretty interesting article from Bloomberg that came out today that pretty much mentioned that Musk is betting the house of Tesla on low margins, low prices, and razor-thin margins. And the man who upended the auto industry is now offering steep discounts for his electric vehicles. Is this more disruption or desperation? Is something that they were also asking. So really, I mean, it's some see him as a Henry Ford at the age of Model T. Some see him as Steve Jobs ushering in the iPhone era. But what if he's Rick Wagner? And if you haven't heard about Rick Wagner, it's probably the reason why, because he steered General Motors into a ditch. So I mean, it's all gonna come down to fundamentals at the end of the day. I mean, I've talked about this time and time again, and Wall Street doesn't care too much about prices or deliveries or vehicles or all that stuff, or new vehicles or AI or robotics. All they care about is the EPS, the earnings per share. And it's unfortunate, right? Because in the short term, the stock price can be punished for not delivering on its earnings per share if there are any macro uncertainties, if there are any other uncertainties with respect to the Federal Reserve raising interest rates, the auto loans getting up to over 6.5%, people not being able to finance these vehicles as easily as 2 years ago. So there's a lot of if and what and when. But if there is a long-term vision, the long-term growth for the company is still intact, there's really no reason for us to be concerned or worry about Tesla's short-term stock price action, and of course the fact that it's selling off. But that's how institutions and retails are a little bit dispositioned, because retail can and has or should be focused on the long term, right? That's really where the focus should be. That if you're investing in a company over the next 5-10 years, the focus should be long term, not on a quarter-over-quarter basis. But for the most part, hedge funds and money managers, large institutional managers, they're mostly focusing on quarter over quarter, right? They're trying to beat their index. They're trying to beat their benchmark. And if they don't, they're not going to find inflows, right? They're not going to find more cap raises, right? They need to do more cap raises, because if they're charging 2 and 20, they're charging that 2 and 20 off of their AUMs, their assets under management. And if they can't drive more cap raises, if they can't drive more inflows to their funds, they're not going to make as much, right? So bonuses are going to be lower, profits are going to be lower, revenue for the companies are going to be lower. So that's where the focus is, unfortunately. Now, this right here is a technical setup. Now, moving over to technicals. Now, before we get into the technicals, I want to quickly also share my fundamental overview. And I'm just thinking out loud here, because it's going to be quite interesting, in the future, if deliveries don't increase at the same rate as increase in the actual or the expectation of increase in deliveries because of the lower prices or margins, right? So that is a really, really important thing, because I mentioned this in my previous video that Tesla could end up in this downward spiral where both prices and deliveries and margins end up lower in the short term. And the reason for that is all based on expectations. Now, we had a debate in our Discord, a couple members talking about how it doesn't work like that in the US. But I feel like it's a more of a global phenomenon, right? I mean, if you're seeing so many price cuts on a big purchase like a Tesla vehicle, And if you constantly, every week, see more and more price cuts, aren't you more motivated to wait for that next price cut? Aren't you more motivated to simply be patient with your purchase for that next steep discount on the vehicle that you want? Right? That should be the general consensus. That really should be the expectation. And that's how deflation really works. Because as people hold off on buying a new Tesla vehicle, and the demand starts to go away because they're anticipating or expecting more price cuts to come in as the recency bias kicks in, because we've seen so many price cuts in recent months. And if that continues, people start to hold back on buying a new Tesla vehicle. That pulls demand away, which thereby forces Tesla to lower prices even more, right? And thereby which lowers margins even further. So it's a downward spiral that Tesla does not want to get into. So one of the things that I mentioned to avoid that is for Elon Musk to literally just put a stop. Come out there and tell us exactly how low the prices are going to get down to for all models, and then that's it. Right? Put a stop to it. Just tell everybody on Twitter or release an official statement and tell them that, look, the Model Y, the Model S, the Model X, the Model 3, all these vehicles are not going below this level. That's it. This is the lowest we're going to cut our prices down to. Because then there is an opportunity to spur that demand back higher on these lower prices. Because on one hand, you've got interest rates going higher, but on the other hand, you've got a lower financing vehicle, lower priced vehicle. So that should compensate for the two. So demand should really be strong. But if you don't see that vehicle deliveries or demand coming in strong, that's a big issue. Fundamentally speaking, that's a big issue for the company. Now, this right here is going to be the technicals. Now, jumping over to the technicals, we are seeing a pretty significant decline, and we are now starting to come down to fill this gap from the past in the 140s and 150s that we have talked about. And again, in our private live stream, I also mentioned this for all the members. And of course, we're also seeing a 50% Fibonacci retracement level get broken to the downside for Tesla. So this right here is going to be the entire analysis. And you'll notice that we have been trading inside this symmetrical triangle, lower highs and higher lows for Tesla for quite some time. And of course, we got this big breakdown after the earnings were released. So it dropped a little bit over 9.75%. We tried to once again re-break out of this resistance at 165 to 175. So we were inside this red rectangle. So we were trying to break past this resistance, but failed to do so. And we continued to slide lower. So where are we going to end up? Where is the selling pressure going to actually stop? Well, in my opinion, Tesla has a very high probability in filling this entire gap. So this right here is going to be the gap that it most likely will fill in. That's going to be in line with this level over here that they have also pointed out to. And that's going to be sitting roughly between 146 and 153. We've already started. So even today, we kind of, we're a little bit inside this gap. So it's going to be lowered a little bit over here. And if I also map out the fib retracement levels, so this right here from the swing low to swing high, what you'll notice is that we are now starting to break down below the 50% retracement level, which is going to be over here, 0.5, which is what they also mentioned in that report. And the next support and the next most important area of demand, and where I do believe that Tesla is going to come down to and it's going to stabilize a little bit, is going to be down to 145. I think 145 is a level that we are going to come down to. That's the entire gap getting filled. And that's also going to be that 61.8% fib retracement level for Tesla. RSI MACD coming down as well, so it's going to start to become really oversold here fairly quickly once it gets down to 145, and that's really the level that I'm watching for Tesla to sell even more cash secured puts down to 125, even as low as 110 for Tesla moving forward. So that's really going to be that next target, that next support level to watch, and we are still very much in the context of this broader overall downtrending channel of lower highs and lower lows. So that's something to keep in mind as well for Tesla moving forward. So hope you guys enjoyed this video and found it helpful. Tesla here, once again, struggling a little bit on the day. After hours, also not really as green as the likes of Meta. So Meta is actually the one that's outperforming Tesla right now. Tesla year to date is up 29%. Meta's up 70%. Of course, not to mention Nvidia is up over 100% as well on a year to date basis. So definitely seeing a lot of weakness on Tesla on the back of this margin pressure, on the back of price cuts, and just investors' time horizon, and the discrepancy between institutional and retail is really what's causing institutional to take advantage of retail and of course selling in the short term, and not realizing that over the long term the story is still pretty intact. But of course we have to constantly be on our toes to monitor the story so that they don't actually pivot away from those higher profitability numbers that we expect for Tesla to achieve in, say, 5 or 10 years down the road. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. Again, don't forget there is a 16% annual discount that does expire in about 3 days now, so you can take advantage of it while it's still here. As always, happy investing. I'll see you all in the next video.